Hello guys, welcome back to Christian Finance for your daily financial content. And today we're going to be going over the latest notable things that the star from The Big Short had to say, Michael Burry himself. We're going to go over both his negative realistic views as well as some potential bullishness that may occur in the near future. So for those of you unaware, Michael Burry is the one that predicted the 2008 financial crisis. He actually shorted when everybody else was feeling bullish and made himself and his investors a lot of money on the way. A lot of people were doubting him at the time, but now almost 15 years later, he's come out to be one of the most prolific and well-trusted investors of our generation. And of course, the movie The Big Short was made specifically about him as well. Now this is the first tweet of the day I would like to go over. And he says, Nasdaq a bull market because it is up 20% off its low. Who makes this stuff up after 2000? Nasdaq did that 7 times as it fell 78% below the 2002 low. And right here is a graph to just back his claim. And essentially what he's saying is, hey, just because we've risen 20% from the low of this year, it doesn't mean that the recession, which officially we're confirmed to be in one because we had 2 consecutive quarters of negative GDP, it doesn't mean that the downturn is over, right? Just because we have had a slight run up. So essentially what he's saying is, even though we're up a little bit, we're going to continue most likely to slide down in the short to midterm. Just before I continue, guys, I just want to ask you to quickly like the video, subscribe to the channel, and also hit the notification button. So this way you're notified every time I upload it. And so you guys are all up to date with the content. And this was actually pretty funny. Essentially, he's saying that the earning reports have a last hooray feeling. Just because the earning reports for the quarter were good, it does not mean that most companies are in a good position. Especially because consumers are not in a good place because of all the macroeconomic factors we have right now, right? Obviously high inflation, 40-year high interest rates, supply shortages, pandemics, war. Now there's obviously tension with China and Taiwan as well. So there's a lot of uncertainty, right? And he's just saying, hey, just because the earning reports were good, that does not mean we're in a good position for the next few quarters, which I actually have to agree with. And then the last somewhat negative tweet I'm going to go over about Michael Burry is this graph right here. S&P, is it 2001 or 2002? And he's essentially just showing us the correlation of the downfall, right, of what happened with the S&P 500 in 2001. And the graph is very similar right now this year, right? So he's essentially saying once again that we have more downturn effect to go. Yeah, well, that is quite telling. I personally keep referring back to the moment when Elon and Jeff at the end of 2021 and beginning of 2022 consistently kept on selling off their stocks in Tesla and Amazon respectively. I mean, when you have the 2 biggest CEOs and founders of the 2 biggest companies continuously sell, you know that the near future is going to be somewhat troublesome. Obviously, you also had Mark Zuckerberg as well selling off Meta shares. So, yes, I do not believe that the recession is over. And as I said, yes, although we are in a negative situation overall with how everything is going macroeconomically, I did want to end off on Michael Burry and his possible prediction of positive outcome coming out in the near future. And that's the whole bullwhip effect. Yeah, and right here in his tweet, he's saying bullwhip effect, Google it. Yes, it's important for you guys to know what it is. But in a rudimentary way, what it means is that because there's a fall in the retail prices, the CPI is decreasing. He's saying that those metrics will eventually cause inflation to fall, which will mean that the Fed could actually start to stop increasing the interest rates and potentially even start to decrease them. Something like this can happen. It could be quite bullish, right? And it is something that will have to happen for us to eventually start the next bull run and the next trend up, right? Both in the crypto and stock space. And with that, guys, the video is over. Let me know what you think about Michael Burry's different takes. Do you think we're going to be negative in the short term? Or do you think that the bullwhip effect might take place and we might see some sort of bullishness by the Fed, by inflation decreasing and interest rates starting to potentially lower as well? Like the video, subscribe to the channel. Let me know other similar content you'd like me to do in the financial space coming next. And as always, guys, stay diversified.